GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's fresher than new bed sheets on laundry day. I'm your host, Jay Hamilton, and today we are joined by William Quigley, seasoned investor, co-founder of Tether, the largest stablecoin in the world, also co-founder of Wax Blockchain, a leading project in bridge technology. Now, last time William was on the show, he predicted 100K Bitcoin by the end of 2024, or we would be slightly off and he would be worried. And here we are at 100K. So today we're going to look into 2025 and see where William thinks Bitcoin will go by the end of Q1 and throughout the rest of this cycle. We're also going to get his thoughts on Trump in power and what that could mean for banking reform in the US and why everybody is going to need a little piece of Bitcoin, from corporations to nation states to investors just like yourself. Now, before we jump in, if you enjoy this episode, please do me a favor and subscribe or like our show. It helps us get more big guests just like William. Also, I have an important announcement I need to let you guys all know about. There is a scam going around claiming that we are launching a token, the Milk token. I want to be very clear. We have no plans and never will launch a token. This is a scam, so please be careful. If you get this email or if you come across it, leave it be. Do not click. Do not engage. Stay safe out there, my friends. As the cycle continues, scams are going to become more prevalent, unfortunately. So please spread the word and protect yourself. And when in doubt, if it's too good to be true, it probably is. Anybody who tells you you're going to get free tokens for no reason, there's probably a lie in there. So be careful. Now, before we jump in, we just need to take a moment to hear from our sponsors who make this show possible. Meanwhile is the world's first licensed and regulated life insurance company built for the Bitcoin economy. They do everything in BTC. You pay in BTC, they pay claims to your family in BTC. You take out policy loans entirely in BTC when you need liquidity. Protect your family from life's uncertainty and a broken financial system. Build intergenerational Bitcoin wealth while the cost of living skyrockets in dollar terms. Plus, get all the tax and legal benefits of life insurance now in Bitcoin. Visit milkroad.com/meanwhile to join the waitlist and get early access to the world's first Bitcoin life insurance. Whether you're bullish or bearish on MicroStrategy, T-Rex ETFs are your gateway to dynamic market plays. Get exclusive access to leveraged exposures with the first 2x short or 2x long ETFs designed specifically for MicroStrategy stock. Position yourself with precision. With T-Rex, you gain access to powerful tools for sophisticated investors. William, welcome back to the Milk Road Show.
Hey, good to see you.
Yeah, great to have you. Okay, let's start with last time you're on the show, as I mentioned, you predicted 100K Bitcoin. You actually specifically called out December 10th as a date that you would be watching. I'm not sure why you called out that specific date at that time, but you obviously are very avid in watching patterns and identifying
Yes.
how patterns repeat themselves. Tell us, how do you feel about where we are and how the pattern is looking so far in this cycle for Bitcoin?
Well, as we talked about last time, I thought Bitcoin needed to continue the pattern it had followed previously in previous halvings for me to feel comfortable that it was going to do something similar in 2025. And if we look, usually you'll have capitulations. Halvings happen in May or April or May. You have capitulations in August or September, kind of goes flat and then starts to ramp up in Q4. And that sets it up for a nice bull market in the following year, in this case, 2025. And that's precisely what's happened. We had the capitulations in August and September, and then right around November, we started seeing Bitcoin take big leaps and hold those. Ultimately, short time ago, surpassing 100,000. It's retreated a bit since, but anywhere in the mid 90s to 105, 110 to me is a great sign that Bitcoin is doing what it has done historically. And therefore, 2025 will be an exceptional year for Bitcoin performance. And where Bitcoin goes, so really do all the altcoins. So that's why we want to pay most attention to Bitcoin.
Mhm. Before we get into where you expect Bitcoin to go throughout the rest of this cycle, I just want to touch on something you mentioned before we started recording, which is that you expect there to be a pullback, or you wouldn't be surprised if there was a pullback. Just talk us a little bit about that and why you think that's going to happen and maybe not such a bad thing.
Yeah, for a couple of reasons. Even outside of the context of Bitcoin, um, you'll always have uh, individuals who are looking at where something has gone, maybe at what entry point they had, and saying, you know what, I'm good, and taking some of their profits. So that alone is going to slow down the upward movement of any globally traded asset. And then you have the impact of lots of people who are they're trying to time things, and so um, lots of people will look at the herd and they become part of it. And as you see great momentum building, you have many people on the sidelines thinking, I've got to get in before whatever before is. Get in before it hits 100,000. Get in before it hits 150. And so those people, I guess I would call them, they're not the hodlers, okay? They're momentum people. And the reason why I had said, I don't know if it was to you, but to some others, that once Bitcoin hit 100,000, which took what, 14 years, it could hit 200,000 in 4 months, 5 months. And in fact, it actually kind of needs to if it's going to fulfill its role from prior patterns. It needs to do that because this cycle will, if we look at the historical patterns of Bitcoin, the cycle will end in 2025. And so if it needs to be what I had said previously, 5x from its pre-halvening amount. Pre-halvening was about 65,000, so 5x, call it 325,000. If it needs to do that, and it needs to do that before December 2025, then by midsummer should be kind of at the halfway point. It should be beyond 200,000. And I've had some people say, you know, for it to go to 100,000, let's say in December, to 200 by March, that seems impossible. But from August to November, less than 4 months, it already doubled, right?
Mhm.
So Bitcoin doubling during these bull market periods is nothing for it from on a historical basis. Even though it does seem wild to think about in March, Bitcoin could be 200,000. I'll make another prediction. I'll say if in April it hasn't surpassed 200,000, yeah, that's a concern.
Okay. So hopefully we're at 200,000. I love your bullishness, and I'm on board. Let's get there. You said that the cycle likely ends in 2025, or not ends, but peaks in 2025. Uh, where do you think we get to? Where do you think Bitcoin gets to before by the end? And do you have any rough timing on when you think that peak might be?
325,000
Mhm.
before the end of 2025. And it might do that in March,
Mm.
and then retreat, and then probably before year end have a nice pop again. That would have been the kind of the 2021 cycle. So it might do that. That wouldn't surprise me. Um, I I would like it to do more than 325,000.
Me
Uh,
too.
uh, yeah, and I'm looking at what um, the multiples it's achieved in previous cycles, and how those multiples keep getting cut by about
Mhm.
half, right?
Mhm.
So as I've said, first halvening 50x, second halvening 20x, third halvening 10x. So, 4 to 6x would probably be what we would say, oh, that's pretty consistent if it followed it precisely. And so that's where I get to 5. And if the other factor that pushes this is Bitcoin is obviously incredibly volatile, and with ETFs it's easier to hold, but it's a very new globally traded asset, right? This is not gold or copper, right? This is really a new asset. So, which means there's a lot of risk. You don't know how it's going to behave. If we had 50 years of data, we'd feel a lot more comfortable than, less than 15. And so as a result, if you are going to hold something like that, it needs to deliver exceptional returns. Or else, why would you ever touch it? You don't want lots of downside volatility and very little upside, right? That's not a good combination. And that's why there's almost like this compelling aspect of it. And of course, there are some people who I think it's a little more wishful thinking, but there are those in the media and smart people who say 500,000, 750,000, 1 million. That would be out of the pattern if it did that in this cycle, which is the reason why I don't think it will. But again, we don't have that much history, less than 15 years. So it's much more capable of doing something we don't expect. But it makes me feel very good when I see it, all of the patterns leading up to a solid bull market all taking place. So that's where we are now at the end of 2024.
Me too. It also makes me feel really good. Let's talk a little bit about the catalysts of what can get us to these numbers, so people listening and can understand where these come from. These aren't, random predictions that we just pull out of a hat. There's reasons and things that we expect to happen in 2025. First, let's talk about the catalyst that's happening right now, and that's 100K Bitcoin. What does it mean for Bitcoin to pass 100K? What's the impact of that?
Well, the number is symbolic, right? 100,000. It got a lot of press, and I think this is good and bad for your audience who trade stocks. They're familiar with this word capitulation, right? And capitulation is a kind of a scary word too. What it means is the last holdout has just given up their skepticism and said, okay, screw it. That's where this thing is going. I'm in. And the capitulation phase typically means that the upside is probably coming to an end, because that's the last money on the sideline that moved in to the category. We did have some capitulation, or at least some apologies. I saw people who have been naysayers for like 10 years, maybe, and now it hits 100, and they're starting to feel dumb. It's kind of like the people who, now I'm dating myself, but the people who are like, there's no way that Amazon is ever going to survive. It's just no one wants to do retail online,
Yeah,
and
right.
and then it did collapse, and after when the dot-com bubble burst, and for a few years it wasn't doing so good, and of course it had whatever it was, 15 years of operating losses. But if you looked at the company's other metrics, you could see this thing is stable and rapidly growing on a lot of other important metrics other than profitability. And the stock market was happy to fund that. Well, I think a lot of people are looking at Bitcoin and saying, this ETF thing, like, that makes it seem pretty permanent. Like there's a lot of interest. It's over $100 billion of net asset value, over $1 billion a day traded. That seems like it's propelled itself to, like the most important among the most important ETFs. And then you look at uh, how we used to every year around the globe, there would be a mixture of good and bad news, often on the regulatory front. Usually, for every positive piece of news, there was some country that was now banning it or greatly restricting it or whatever. Like, look around us. There's no meaningful country who's coming out right now and saying blockchain is bad and we are going to arrest people who hold Bitcoin. It's wherever the US goes, for right or for wrong, so does the rest of the world. And with Gary Gensler, the chairman of the SEC, saying he's going to step down on the day Trump is inaugurated, becomes president, we know how anti blockchain he was in crypto. The U.S. with Trump's very pro crypto policies, provided he delivers. But at least if we look at his cabinet, um, there are no diehard anti crypto people. I think the federal government is going to become much, much more receptive. And as that happens, the rest of the world is going to do what they always do. Up, let's follow the Americans. So it's going to be very good news, it would seem, for blockchain and for Bitcoin in general. Through 2025. We'll have setbacks because there's always something. This time around, I'm really hoping that the dumb Bitcoin lending platforms don't take off. I'm hoping people understand there's no free lunch. Do not hand over your Bitcoin for an IOU from some sleazy company that doesn't have audited financials, that doesn't have quality management, like people did in the last cycle. Um, I hope the community kind of like attacks those types of businesses, because that really, the deleveraging of that last cycle was super painful.
Yeah.
Not to mention, of course, the scam artist Sam Bankman.
Yeah, no kidding. Yeah. And unfortunately, as you said, those things will happen again, particularly
Some
in
people are going to get
here.
scammed.
They know. So it's just don't don't sit there and say, "Hey, because we're evolving and our tech is improving and we're starting to get regulation, oh, it's all safe now." Like, you really do need to be vigilant and watch out for yourself. In
Yes.
our prep for this show, you said something great to me in an email exchange we were having. You said that a result of 100K Bitcoin was that it forces everyone to ask the question, okay, should I own Bitcoin? Like, it's now at the point where you can't ignore it. And when I say everyone, I don't just mean retail and everyday investors. I mean corporations, I mean nation states. And we're seeing that right now.
Yep.
Amazon just recently, a letter was produced from Amazon shareholders saying, we think that Amazon should hold 5% of its assets in Bitcoin. Amazon has over $500 billion in assets, $88 billion in cash or cash equivalents. And there's the potential. Now, we'll see if that shareholder vote passes or not. Microsoft is voting today, right now, as we're recording,
All
on
right.
whether they will start to buy Bitcoin on their corporate balance sheet. What's the impact of these corporations? And do you expect that large corporations in the next year, Amazon, Google, Microsoft, might buy Bitcoin, or do you think we're still too early?
I think we're too early. I don't think, I think right now it's more of a press release phenomenon. Like, look at, we bought Bitcoin. So I've been a CFO many times. I I would be reluctant to hold it on my public balance sheet. Uh, uh, so think about it this way. you're a company and you sell whatever, t-shirts and books and electronics online. You're Amazon. Um, you have trained over 25 years. You've trained equity analysts, the people who read your 10Ks and your 10Qs and tell the investor community what they think of this company. You've trained them on the things that you believe Amazon should be judged by. And it becomes, after a company's been public about 10 years, even better, 20 years, the analyst community can get a good sense of, okay, a new product's coming. This is how it's going to affect the earnings per share and so forth. And so what you don't want as a CFO is to have this weird thing on your balance sheet that gets marked to market and that moves up or down 5x to 0.25x, and it's a meaningful enough number that it's disclosed, and so your EPS is like doing this weird thing. And then what you're gonna, the analyst community then needs to strip out the Bitcoin piece of it and say this is earnings excluding volatility. So yeah, I don't think it's a proper thing on a balance sheet of a big company in this current phase. Maybe somebody could come up with an argument that I would say possibly. If you look at like MicroStrategy, this was a company. I mean, I remember MicroStrategy when it was a private company in Northern Virginia back in the 90s. And it was most of your audience, they were probably in elementary school or maybe not born yet. But back then, MicroStrategy among like the investor community was like it wasn't equivalent to Amazon or whatever, but it was a company. It might have been like a Twitter. I mean, people knew about it, right? It was this high flying software company doing a lot of like data analysis. Michael Saylor was pretty well known, and then the company had some accounting issues. It crashed. It disappeared. Michael needed to figure out, how do I ever breathe life back into this thing? Like, nobody cares about MicroStrategy. Every once in a while, I would catch myself thinking, I wonder whatever happened to MicroStrategy. So for him, that was it was a way to get back on the map, right? And he's like, screw it. I'm going to basically become a hedge fund, a publicly traded a Bitcoin hedge fund. At some point, you might even see, I suspect, him split it off. There'll be the MicroStrategy Bitcoin holdings and then this operating company. Because if you're a CFO of that company, MicroStrategy, no one wants to hear about how the core software business is doing.
No.
Right? They're going to be like,
Yeah.
what? Like,
Yeah.
stop. Tell us about how many more bonds you're going to issue to
Right.
buy more Bitcoin. So they've become a publicly traded, leveraged Bitcoin hedge fund. And I think for Michael Saylor, at his age especially, he's like, hell yeah, I want to do something different, right? But I kind of feel like they should be split up. So that's for me on the company side. I don't think it's a great asset to have on your balance sheet because people invest in companies because they believe the products or the services of that company are selling into an expanding market with expanding margins, and they've got a good innovation pipeline. And that's how you want to think about it.
Mm-hmm.
I don't think any of us would, if I created a competitor to Uber, and it was a terrible service, right? Shitty cars, shitty service. But I gave you like a cash back thing on every trip, which was Bitcoin. I don't think that would do well because I think people would just say, I'm wanting to use you because you can take me from point A to point B. I don't really care. I can buy Bitcoin off an exchange. So that may not appeal to the rabid Bitcoin maxis here, but if you want to get into it, buy an ETF. And like I said, there may be an argument. For instance, Coinbase. You could argue that Coinbase is already completely correlated with crypto. So if it had a lot of Bitcoin holdings, I don't think that would necessarily be a negative.
Mm-hmm. Mm-hmm. Yeah. Do you? I'm not sure if you've thought at all about this, but do you have any concerns around MicroStrategy with all the buying they've been doing? They own over 2% of Bitcoin supply now. So when we think about black swan events, if there was an unraveling of MicroStrategy and they were forced to panic sell their Bitcoin, that would be a really bad possible event. Do you have any thoughts on if there is the potential of that happening here?
Well, first, I'd say we've already lived through this before. Grayscale Trust had 3% of BT. Maybe it still does, 600,000 or so BTC. MicroStrategy is around 400,000. So I'd put those about in the same bucket, MicroStrategy and Grayscale Trust. And it's like, yeah, on the one hand, 2%. But if you told me, some investor has accumulated 2% position in Microsoft, I wouldn't care. 20%, I might go, oh, that's a lot. So no issues there. Also, he's always been very, very smart, Michael Saylor. And if you look at the way he has had a MicroStrategy acquire the Bitcoin, it's a wonderful low risk, I dare say almost no risk um, uh, contraption for MicroStrategy, because they issue a bond. The bonds are backed by the Bitcoin they buy, which there's no like ability to do a margin call on his bonds. It's like the bonds mature on X date, and the right now, of course, they're way in the money. And let's say the bonds matured and Bitcoin had collapsed. Well, it's kind of like having a commercial mortgage-backed security. If the underlying mortgages on the properties are worthless because the properties are worthless, so to some extent that's true right now in many big cities, the bondholders get that worthless property, right? But the issuer of it is not harmed. That was the benefit of the bargain. So if, on the other hand, MicroStrategy had issued corporate bonds guaranteed by the assets of MicroStrategy, and they couldn't pay back the bonds because the Bitcoin they bought didn't give them enough money to pay back the bonds. And then MicroStrategy went into receivership, and then some, I hate these bankruptcy receivers, they grabbed all the Bitcoin and they just dumped it at spot prices. Yeah, but that would hurt us for a month and then we'd be okay again. But the way he's done it has been such a well-constructed way. Maybe there's a flaw in it, but I've looked at them and I don't see any big risks for certainly not for MicroStrategy, the issuer of it. I bet you there's some companies out there that wish they had done that.
For
And
sure.
the fact that Michael says, it's going to get to 1 million or whatever, and then he says, and I'll be buying at 1 million too as well, right? And I think his 2050 projection is 13 million, and he'll be dead by then, so he's never going to be held accountable for it. It's really good when you're going to make predictions. The one I made with you guys a few months ago, those are stupid predictions. You want to make a prediction that's like 50 years out, right? Yeah. We've
No.
seen this with all the climate people. It's like, oh, the world's going to melt in 2010, 2000. Those are bad predictions.
Right.
Though he has made some near-term ones. So yeah, I'm not worried at all about that. And it speaks to the broader thing about, well, what is going to be the impact of this broadening of the buyer base of Bitcoin, right? So it's like, oh, could it become a reserve asset that governments hold? Which, by the way, wouldn't bother me at all, because governments aren't going to go, bankrupt, at least not in the traditional sense. Especially governments that are allowed to print their own money, they can never go
Right.
bankrupt. So I love the idea of the United States buying Bitcoin. I don't think that'll ever happen, to be honest. But
You don't think it'll ever happen? Really?
no, no. Now, somebody might
Never.
say it's already happening because they seize money. Okay, right. The
Different.
government seizes property from people, and maybe under Trump, it won't sell. I don't think I'm a conspiracy theorist, but I felt like every time we would be in a little bit of a uptick, the freaking people in these federal agencies would announce they're going to sell 50,000 BTC at spot or 100,000, right? I've seen it again and again. And I'm like, this to me is like, it doesn't seem coincidental. So I wouldn't mind a 4-year pause. I wouldn't mind a 4-year pause on selling Bitcoin. Does the federal government need to sell it? Of course not. It can just add a zero and print more money. So just like it holds some gold, if it's going to hold some gold, I don't know what Fort Knox has, like 500 billion or something of gold. If it's going to hold gold, why not? Like, why not hold some Bitcoin? Um, um, how much that would influence the price, I don't know. You can do the math, but it's the Chinese bicycle math. Like when I was a young venture capitalist, we called Chinese bicycle math when somebody would say to us, "Look, the market is 1 billion people." Like Chinese bicycle. If every person in China buys one bicycle, that's 1 billion bicycles. So it's sort of like very high level and not very deep. You hear this a lot. If every corporation just took 1% of their assets, then yeah, but I don't think they're going to. On the other hand, I think it would be very beneficial for us if the ETFs continue to grow. And the reason for that is the holders of ETFs, a lot of them, and your audience might not understand this, a lot of the holders of ETFs are retirement accounts. And you say, okay, why would I care if it's in my Roth IRA or 401k versus in my whatever Robinhood account? Well, here's the reason. Because most people who acquire stocks in their retirement accounts are not day traders. They're not even year traders. In fact, you see constantly education aimed at retirement account holders saying you need to rebalance at least once every 10 years, right? So
Please update your
please
portfolio.
rebalance. And God knows I've been guilty of this. It's this like, it's my retirement account. I'm going to get that in 25 years. It doesn't matter. And so those ETFs could become, in the geology of the hodlers, they could become those that haven't moved in 10-year types, right? Which would be really good because I haven't looked, to be honest, I haven't looked in like a year, but now it's the bull market. I'll be looking again. But historically, less than 10% of Bitcoin has actually been traded. So you have like 20 million. Of course, it's grown from zero, but like roughly 20 million Bitcoin. You have the 4 million or so that's lost forever, right? And then you have like 15 million or so, maybe a little less. That doesn't move much in the past 3 years, 5 years. So there's this small amount that freely flows, which is why it's so subjected to volatility, because there's not much, right? there's not much that's available. And if you have a Hoover vacuum cleaner like a big ETF or Michael Saylor, just hoovering up hundreds of thousands of Bitcoin, and you've got guys like me, you, who are hodlers. Well, where does it come from? Well, there's for people to part ways, that has to be very highly priced.
Yeah, it's very interesting that you bring that up, because we had Matt Hogan, the chief investment officer from Bitwise, recorded last week. This episode hasn't come out yet. It comes out in a few weeks. It's his 2025 prediction. So giving you listeners a little bit of a tease here. But one of his very interesting predictions was, for the Department of Labor has basically said they haven't put in strict rules, but they've basically said that they've made it very difficult to get access to Bitcoin through your 401k. And his belief is that next year that will change and they will relax a lot of those rules. And nobody's
Yeah.
really talking about that. But exactly what you're saying, those are the type of, if those rules are relaxed, if that type of fixed income investor now has access to purchase Bitcoin, and they're very likely not going to sell it when they buy it, that could lead to a lot of flows, and flows that they're holding it for the long term.
And just to make one point in what you said, I don't think it's the fixed income investors,
You
right?
don't
I
think
mean,
so?
those fixed income are like, they're the 75-year-olds golfing. They need a fixed percentage of income to fund their life. So, in fact, if you're asking me, I would say don't you dare touch
Don't touch it. It's too
Bitcoin.
volatile.
Too volatile. But to the other point, if we could make it not only administratively allowed, or at least not filled with friction, and educate people, that might be of the list of things I would say make $1 million Bitcoin likely. That would probably be in the top 3 list of things, because we have 40, whatever it is, 40 plus $trillion of wealth held in publicly traded assets just in the U.S. And Bitcoin's 2 trillion. Being able to give those people exposure to crypto, which is, for me, which is a great place for it to be. Set it and forget it. You're 45 years old. You're like, you know what? I'm not going to be an idiot, but I'll take 50 basis points, 1/200th, not even 1%, 1/200th of my assets, and put it in Bitcoin. It is irrelevant if it goes to zero, right? But it could make your annualized yield ultimately maybe double, right? This tiny little thing. So you'd probably have to rebalance it at some point. But I really like the idea of people who have investments that are targeted like 10 years plus. So think of all the endowments, charitable foundations, organizations that have a mandate basically to survive in perpetuity. The Getty Trust. It's got this, whatever the money is now. When I was an auditor, I actually audited Getty Trust. It was 20 billion. It might be 50 now. I don't know what, but that thing, which is going to be around as long as the United States is going to be around. Of course, university endowments. I mean, they're the oldest institutions in the United States. Been around since the 17th century. Some of them. They should all hold it. There's no reason why they shouldn't. And essentially, any limited partner that a venture capitalist approaches for money, and for your audience, when venture capitalists or private equity people or hedge funds raise money, they don't generally go to the public. They go to what we call the limited partner community, which is university endowments, charitable foundations, some giant corporations like insurance companies that hold large amounts of capital, um, groups like that, some family offices. So you think like the Gates Foundation, giant family offices who have a time frame of multiple generations. Like the fact that those people are going into um, uh, venture capital funds, which are 10-year plus dated, some even 15 plus if they're like biotech, means it was a missed opportunity to begin with. By the way, I did speak to such groups years ago because as a venture capitalist, I knew a lot of them. And I gave what was, I call it an IQ test. I think it was an IQ test because if once I said what I said, the only answer was to buy it. And I'm just being realistic. It was like you could say it was like a lottery ticket in the sense that if you buy it and you lose, who cares? Because it was $1. But it was a lottery ticket with a lot of fundamentals that pointed to it being important. And if you're already buying things in the technology arena, if you don't want to be US centric, a lot of these places have to think about, well, the US market may become like Europe at some point. It may kind of stall. GDP may be flat for a long time. You want to be in areas that are growing. Well, crypto is a globally traded asset. But they were scared away generally by Wall Street people who told them it was a scam. And the definition of a scam to a Wall Street person is a asset that they can't make a commission off of, right? So that's the reason I think most of them said, don't do it.
Yeah, great.
But
Thanks.
that'll be big.
Yeah.
We should pay attention to it.
And let's be clear, those institutions are not buying Bitcoin. Maybe a few of them. Like we know, Wisconsin Pension Fund bought some Bitcoin about, I feel like earlier this year, but those institutions are not yet buying. And mainly they're not yet buying because they have very strict mandates. They're very large institutions that they don't make changes to their mandates very quickly. And their mandates don't say go buy a high risk, what would be considered a high risk asset such as Bitcoin. So they're just literally not allowed to. Now, some of these organizations, they can buy bonds though. And there is a way that they can back into it. They could go and buy some corporate bonds from I know that, for example, in Bitcoin miners issued about 4 billion in convertible bonds in November. And who do you think those are being bought by? A lot of those bonds are being bought by these large institutions who do want access to Bitcoin, but can't just go directly buy it yet.
Yeah. And I'll just say though, again, I've talked to a lot of these limited partners over the years as a venture capitalist. No, their mandate doesn't say buy crypto, but they have an investment committee, and the investment committee has decided on an allocation schedule. So whatever, 50% is going to be in super secure, like global corporation stocks. And then, some will be in real estate and some will be in commodities, but they always have a small allocation. I think CalPERS, the California Retirement System for Public Employees, CalPERS had a mandate, which they never were able to hit, which is kind of funny, of 2% of their assets should be in venture capital. Really? And they could never do it because their assets kept growing. And frankly, faster than their venture capital holdings. They were, you can only write small checks to venture capital funds. You can write $1 billion check to a giant private equity fund, right? Which is one of the reasons private equity, frankly, has done so well, because as these mega sovereign wealth funds and US municipal and state retirement funds, as they became bigger and bigger and bigger, it made no sense for them to write the equivalent of a $1 check to 50 funds. And they're like, I'd just rather put $1 billion into Blackstone, you know? And so, and there are ways that they tried to make it more scalable, but they did have a mandate to invest in innovation, right? And a lot of the endowments, Caltech had a mandate to invest. Part of its mission was to be investing in the future of innovation in America, which pretty much meant venture capital. And maybe they shouldn't own this stuff directly. Maybe they should invest in crypto-focused funds, right? I could see that, but if I were on the investment committee of one of these groups, I would have taken a certain amount, but it, again, would have been very little, maybe 1%. And I would have bought Bitcoin directly because I don't have to pay a 20% tax, which is called carried interest. That's the portion of the profits a fund makes that it keeps for its managers, and it gives 80% of the upside to its investors. So you kind of you bypass that. But I always sensed two things when I would talk to these people, and there was nothing in it for me other than wanting them to do well. I wasn't selling them Bitcoin, on a commission basis, but it was a little bit difficult. Where do we custody it and all that? I think that problem could have been solved, but that was one problem. And then the other was the managers who work for these endowments. Their bonuses are based on relative performance. So, as some of your audience may know, it doesn't do that much for these guys to stick their neck out, and maybe they have one good year, and relative to everybody else, they did better, so they get a bonus. But if there's a bear market for 4 years, and you do what everybody else does, you perform poorly, you don't get fired because it's grading on a curve. And so they kind of feel like, I don't really need to own Bitcoin because if I miss out on it going up, well, no one else owns it either except for these random people. So I'm not going to be judged poorly. And if Bitcoin does bad and drags me down in years where everybody else is doing well, I might get fired. So you always have to look at incentives, right? When it comes to how people are making decisions, because they are, in economics, we call these agency costs. An agent is someone who you've instructed to do something on your behalf. And an agent could be your employee, right? It could be an Uber driver, someone you're instructing to do something on your behalf. And economists have this phrase, agency cost, which is the person who is doing the task is never fully vested in helping you perfectly. They also want to help themselves. So and if you have a good incentive system, you recognize that and you accept it, right? But I would say with guys like Larry Fink, for your audience, he's the founder and chairman, I guess, of BlackRock, managing 10 trillion in assets. I'm old enough, and it's not that long ago, to remember when Larry Fink was calling Bitcoin, and crypto, the stuff that money launderers and tax evaders were interested in. And to see him talk about Bitcoin now and this giant smile on his face. And the reason is simple. He's decided that retirement account holders want to own it. And that's the reason why, which I had such an issue with, Gensler personally reached out to BlackRock and said, you guys should do an ETF for Bitcoin. Like, why should BlackRock be rewarded and have this like carte blanche ability to do an ETF when there were people out there, friends of mine, since 2015 trying to do it who were told, no, you're scumbags. So good riddance to him.
Yeah, no kidding. Yeah. William, I think we're gonna have to cut the episode off here because we're well over time. But this has been a fantastic conversation. Always a pleasure to have you on the show. Really appreciate your candor and your experience in the space. And we'll have to get you back on in March to check in where we're at.
Or April, March or April.
March or April. We'll see.
Yeah,
Thanks.
it'll be fun. I'll be looking forward to what's happened.
That's what I like to hear. I'm glad you're having fun. So are we. Everybody, have a wicked awesome day. Thanks for listening in. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.